Welcome to Passive Investors Playbook. I'm your host, Charlie Hardage. In each episode, we'll sit down with successful people that turn to real estate to build and grow their wealth. We do a deep dive into why they chose real estate and what makes it so attractive to them. We explore why people in their industry could also benefit from passively investing in real estate. Whether you're a beginner or an experienced investor, a doctor or a professional athlete, love your job or hate your job, our show is here to help you build a profitable real estate portfolio while maximizing your free time and minimizing stress. So sit back, relax, and get ready to learn from some of the best in the business. Welcome to Passive Investors Playbook. All right, thank you so much for listening to Passive Investors Playbook. My name is Charlie Hardage, and I am joined by my friend Rob Natale. Rob is the founder of North Square Capital, a privately held real estate firm based in Boston, Massachusetts. For several years, Rob was deeply entrenched in the world of asset management, working with financial advisors and their teams who manage assets from $20 million to $3 billion. However, Rob couldn't help but notice that these highly successful teams operated in isolation. They rarely shared new ideas or strategies that could benefit a more sophisticated audience, like several of his relatives who dedicated their lives to medicine. Rob saw how the financial services industry poorly served them. Rob soon discovered a financial secret. His mission now is to help medical professionals buy back their time, expand their wealth, and redirect their funds from Wall Street to Main Street through passive real estate opportunities. Man, Rob, thank you so much for being here. I'm so excited that you're here. We've had many conversations, and I'm glad you're here today.
Oh yeah, thanks, Charlie. Thanks for having me on. I really appreciate it.
Absolutely. So, man, I love that background. You spent years in Wall Street. Want to definitely dive into that. And then you have family members in medicine, which is amazing. And you saw a gap, right? And so I definitely want to dive into that. But thank you so much for being here. How did you get into Wall Street? Let's start there.
Yeah, so when I started working at a company called Columbia Threadneedle Investments. So they are a very large global asset management company managing in excess in totality of $500 billion in assets under management. So it really exposed me and started my experience in the Wall Street world of the public marketplace and having day-to-day conversations, with financial advisors. Again, what you alluded to, these teams and individuals out in the Pacific Northwest, assets that they were managing from, the 20 billion to $3+ billion from an AUM perspective. So that's really then how I got involved and started getting exposure in my experience, kind of really in the Wall Street world, working in an asset management company like Columbia Threadneedle. And as you were reading, a little bit of my story, one of the things that was really becoming very prevalent to me was the higher up in scale that these teams were as far as the assets they individually managed. It was very much a strategies being implemented. I almost felt like it was more of like I shouldn't say secret society, but very much the keeping it in isolation and information not being dispersed out that can benefit many other individuals and sophisticated investors, like you spoke to, like my three family members who were serving or were in the medical field. And it was a very stark contrast to really the medical community, where if you have a great idea, there is a breakthrough, that information is dispersed out, whether that be amongst other doctors, scientists, researchers, whether that be then to other doctors for the treatment, let's say, of patients for the greater good, not only for society, but from an individual's health perspective. And after being involved in this environment, for a while and really seeing how the traditional approach that I was seeing was becoming much more, I would say, kind of cookie cutter, talking to my family members about how they were being treated, and really found that the financial service industry was very much poorly serving them in general. But through this experience, that's where I mentioned to you really the financial secret that a lot of folks just don't know about, that I learned about through my work experience, is real estate, and specifically real estate syndication. And because of that, that eventually led me to branch off to that and eventually start, North Square Capital, where our goal, our mission is to, help medical professionals, like you mentioned, buy back their time, really expand their wealth through passive real estate opportunities and diverting some of their assets they may have in Wall Street to Main Street. They can work towards a path towards financial independence.
Man, I love what you said about Wall Street keeps it secret, medical field makes it public. That was my summary, but
Yeah,
I love that because I think you're right. Wall Street keeps it maybe hidden and I know we're going to get into 401ks and IRAs a little bit later, but
sure.
think about it from that perspective, to the audience.
Yeah.
Um, you put your money into a 401k, you only have a few options. You don't really know what those options are, right? You could do a ton of research to figure out the mutual funds or the where that money is being invested, but they don't tell you their strategy or they don't tell you too much more about it, right? Wall Street doesn't. The medical field gets a massive discovery. The media knows about it, right? The news knows about it, and then sometimes we know about it as well as just
Mhm.
people, individuals, because it's a breakthrough. And so when you were working on Wall Street, you heard about syndications. Is that right?
I'd always, yeah, and really through that's where my first exposure, talking to these major teams that were managing the billions in assets, and we talk about different strategies. At Columbia, right? At Columbia, what we were offering them was mutual funds, exchange traded funds, separately managed accounts, a number of different investments that they did utilize to build out their clients' portfolio. But they also built it out through alternative investments like real estate and through syndications like that. Like I know, like you offer to Charlie for your clients, and through passive investing, and really talking through that. That's where I started to really go down the rabbit hole of the power that these type of investments can offer, and really the lack of education about these spaces, and lack of options for most of the population to even get exposure and to invest in these type of opportunities.
Love it. Lack of options and really lack of exposure.
Yeah. And you
Um,
made a
it,
good, oh, sorry.
no, go ahead.
And you said you touched on a pretty interesting point to Charlie. So you talked about briefly about 401ks, and also I know for the medical community out there, and for teachers as well, et cetera, they have 403b, so their version of 401k. And like what you talked about, the investment options can be very limited depending on the plan you have. You might only have somewhere between 7 to 15 options to
Yep.
invest. You might have, you have some index funds, maybe some growth strategies, and some strategies a little bit more conservative, and some more fixed income strategies. And with those, like you see really in the marketplace, stock market, it can go obviously up, it can go down, it can kind of be sideways. And depending on when you might be looking to retire, and from a control standpoint, the ability to build out a predictable stream of not only income but appreciation through the public markets is an extremely, I'd argue, not only a challenge but also impossible to do, because you just don't know what's going to happen.
Yeah. Yeah. I like the that you said lack of exposure, and I wanted to touch on that. And for a long time, up until was it 2011, I think, or 2012, I'm going to say common people, normal people could not get into syndications, right? You had to have a ton of money to buy an apartment complex. You had to have a ton of money to get into a syndication. So I do think over the last 10 plus years, there's as syndications are becoming more popular, there's still probably 99% of the population doesn't, they're not been exposed. They have not been exposed to syndications yet. So I definitely appreciate talking about the lack of options, lack of exposure, and how Wall Street keeps it a secret because they've known about it for a long time, and that's how they invest. That's how they make some of their money through syndications. But now
90%
it's
of millionaires, that statistic, right, are investing or have grown their wealth through real estate.
yeah,
So you're spot on.
yep. So you got into real estate. You had heard about the syndication piece through your job at the Wall Street firm. Um, what why did you get in, or how did you get into real estate?
So for Charlie, me as an individual from investing perspective,
Yeah, from you as an investor, and then how did your firm North Square Capital come to fruition?
yeah, so the way I started investing into opportunities as a limited partner was through a combination of both qualified and non-qualified money. So from non-qualified, just money I had, let's say in a checking or savings account, and then from qualified money, I had money in my 401k. My custodian, where my assets were held, didn't allow or provide me the opportunity to invest in any sort of syndication opportunities. So I took that money out. Um, and did I take the penalty? Yes, the 10% on the amount being withdrawn. But for me, just doing the math and the numbers out on the long run, it was well worth it and made a
Yeah,
lot of sense to do so. So that's really where the assets have come from to invest in these opportunities, both as an LP and as alongside my clients and the limited partners that people that partner with us on continuous investments. How I got into it was a little bit more of a of not the straight road, right? So I know I mentioned about my experience, and I saw really learn this, I'd say, financial secret from a Wall Street perspective of the power of real estate investing, and then I knew I wanted to get out of what I was doing. Okay, the a variety of different components just didn't align from a moral compass standpoint, and I knew
mhm,
I wanted to get out of. I wanted to transition out of Columbia Threadneedle Investments, and it wasn't just right away did I get into an open North Shore Capital. I went and actually went into the mortgage world, residential mortgages, 4 units and below on both purchase and refinances. Then I got my residential real estate license. Again, I'm based in Massachusetts. It was really to get a good sense of both sides of the business. But even as I was doing that, I still always kind of had this pull of, you know, I know something that I really truly believe can be a help to a lot of people, help grow their wealth, really help provide them an opportunity to obtain some sort of financial independence or additional freedom. It was always getting pulled like, oh, Rob, like I'm talking to myself now in the third person, but like, hey, Rob, like, you know, think you should kind of start a company and really get in here and do it. And that eventually that is what led me down this road where the mission and I the drive and the ability to help folks where I now have started North Square Capital. I left the mortgage world, the residential real estate space. Again, I don't focus time on that. I'm strictly you know, at North Square. And my primary role and responsibility, Charlie, is vetting operators, vetting individual deals. And if both of those check or boxes are checked off, then I look to invite my clients to partner alongside myself in those opportunities.
awesome. Man, I love that. I love what you said. You're pulled into syndications. Um, you're helping people. You're giving the opportunity to achieve financial freedom, that time freedom. I know you mentioned that a little bit earlier too, for the medical professionals where they're able to buy back time. And I think that's extremely, extremely important. I think COVID, one of the things it did was Everyone, it seems like, maybe not everyone, medical field probably would be the exception here, but um, I think personally, having a slower life for a few months, couple months, however long that was, made me appreciate not being busy 28 hours a day, 7 days a week, just gave me a little bit of my time back. We weren't running errands or running around all the time. The medical professionals, depending on what type of medical field you're in, uh, probably made it worse. But maybe even more important to them to buy back time and to enjoy their life. So like you, Rob, when I invested in my first deal as a limited partner, as a passive investor, man, that had such a huge impact on my life. And at that point, I knew I wanted to go active, but I was 3, 4 years away from going the active route. But after the first couple of deals that I invested passively, I was like, man, this is awesome. This feeling, I want to be able to help other people feel this feeling that I'm feeling of just
Yeah, for
my
sure.
life is changed.
Hmm.
Going back to even before what you said, Wall Street keeps it a secret. I had no idea about this, right? I didn't
Hmm.
know this was a thing that people could do, people like me. So I love what, I love your story, but then also why you started North Square Capital, just because you're helping other people achieve financial freedom and time freedom.
No,
Um,
that's no, you're spot on.
what, why, like, what makes real estate so attractive to you? I know you were in the mortgage industry a little bit, real estate license as well, but why do you want to invest in it? Like, why is it so attractive?
Yeah, so there's a number of different reasons, so I'll definitely hit on a few. So number one, and I touched on this a little bit too, the lack of predictability by investing in the stock market. Investing in real estate, as long as you are working with a good operator who knows how to execute a business plan, right? That is very important, which we can definitely dive into. But by getting in these type of investments, you really can start building out predictable type of not only cash flow but appreciation with your investments to get you to where you want to go. So let's say you have a goal of, okay, I want to have this much in cash flow a month. I want to have this much in net worth at this given amount of time from my investments. You have much more power and control to do that through real estate than by investing in the public markets. By investing in a tangible, hard asset, right, that you can feel and touch, really is a huge one of the major drivers for me as far as attractiveness. The other piece too, as well, is from a tax benefit perspective. So when you're investing in a syndication, unlike a REIT, a real estate investment trust, where it's essentially you're investing into a fund, you don't not only do you not own underlying asset, right? You own a piece of the fund, but any of the tax benefits, the paper losses, they don't get passed down to the investor because they don't own a piece of the property. They own the fund, piece of the fund. In a syndication, from a tax benefit perspective, you get as a limited partner, you get a K1 every year that is signifying your percentage of ownership in the property. And what happens is on every K1, you'll see a figure that talks about an actual paper loss or through the property. And you can take that figure and you can do one or two things with it. You can either take that and offset, let's say, some of your passive gains. Okay. And if you have more gains than losses in a specific year, that's okay because your losses can carry over in perpetuity. But then if you also then some were qualified as a real estate professional, you could take those passive losses and then even offset them against your active W-2 or your active income, which is even I mean that's like the holy grail,
Mhm.
so to speak, from a tax perspective. Between the tax benefits and really the power to build the strong streams of cash flow and appreciation, predictability of it is what drew me to real estate.
I love that. Man, I love your detailed explanation, Rob, because you did mention the lack of predictability 10, 15 minutes ago, but I think that's something that I want to double down or triple down on, I guess. But um, in real estate, and to be fair, there's a lot of different routes in real estate you can take,
Yep,
different investment strategies. And some of those are cash flow, some of those are appreciation, and then there's a combination, right? In
yep,
general, real estate's going to appreciate over time. Real estate, there should be cash flow as well. I know, going back a few minutes before that, for you at North Square Capital, you vet operators, you vet deals and markets. So your investors don't have to, you've already checked the boxes, right? And so they can recheck them if they want, but that's
sure.
that's your job. That's what you do. Um, and so you pick the operators that work with you well, that are transparent, but also then that means that you have great investment opportunities for your investors, in where you can get that cash flow and that appreciation. You also mentioned obviously real estate is tangible. It's a hard asset, unlike a REIT. REIT is essentially, maybe for easier terms, it's like a stock, but instead of a tech company, it's a real estate company, but that's it, right? So you don't get those additional benefits, the tax benefits. And this episode's going to probably release, first of the year, March sometime, February or March.
Mm,
And I want the audience to take a look at it. If you're connected to people on LinkedIn, Facebook, Instagram, whatever, a lot of real estate investors are going to post their tax returns because it's most of them say negative cash that year, right? Or the year
mm,
before. And I always love seeing that because, people make good money, but then they get it reduced because of the depreciation. So,
yep.
yeah, thank you. Thanks for talking about why it's so attractive with it's predictable, it's tangible, and the tax benefits. So with North Square Capital, I know you said that your do you have a fund?
Yes, what we do, we create something called, without getting too deep into the weeds, we create specific entities. They're called special purpose vehicles or fund of funds based off of an investment opportunity. So to give an example, we raised on a 220 unit multifamily property in right outside of Dallas that closed about a few months ago. And by what we do is we create a fund of fund vehicle where our investors and our limited partners, they invest into this fund that we have created. Okay. And then that fund goes in and invests into the specific opportunity. So for example, let's say it's, you know, Charlie Equity. You are the operator. You acquired this property in Dallas. Well, I'm creating a specific fund that, again, limited partners and my clients can invest in. And then that fund will take and will go invest directly into Charlie Equity. The reason why that is done is a couple of reasons. One is by investing in, I've negotiated terms with, let's say, Charlie Equity, the operator, about, hey, I'm going to bring a certain amount of capital to this opportunity. And by doing so, by stating really a certain amount of capital being brought to the opportunity, the ability to negotiate better returns for investors, my clients, versus just going and investing with Charlie directly. That's really one reason why, let's say, the fund of fund vehicle is created, is it's not only better returns, but there's also more flexibility from minimum standpoint. So sometimes you might see some opportunities that have minimums of 100, 200,000, whereas coming through a fund of fund vehicle, I can set that minimum, let's say, at 50,000. So it's providing more individuals an opportunity to invest and start growing their wealth and exposure through real estate Whereas if they try to go directly with the operator, let's say in this case, Charlie Equity, they wouldn't be able to do so.
That's awesome, man. Yeah, I love that model, the fund of funds, because and just to recap that, so a passive investor would be investing into your fund, and then you are on behalf of your fund because um, maybe you have 20 people in there that have each invested $50,000 exactly. So that's $1 million.
Hmm.
So now you go to an operator that you've already vetted with a deal you've already vetted, and you can say, "Hey, we have $1 million. How can you sweeten this pot for me?"
Yep.
Basically. And
Hmm.
so then, they'll give you an extra, I don't know, point, 2 points, whatever it is. Um, and then that's passed down to your investors. But then also what you mentioned is, and in this example, maybe the minimum would be $50,000, but let's say someone has 25K. Now they can invest in your fund because your fund is bringing in $1 million, not that one person bringing in 25. So I love that fund to fund model. I think it's or fund of funds model.
Yeah.
I like that for so many reasons, and as a passive investor, there's so many benefits from that as well because you are kind of the one that's doing more of the work for them to vet the deal and all that because some of the passive investors don't necessarily know how to properly vet a deal or an operator. So
Correct.
love
And
that.
I think it's a really, I know we touched on it a little bit before too, Charlie, and then you bringing it back up. Yeah, like that's right. That is our jobs. That's my job, like you said, to vet these operators and opportunities. Um, if I don't do a good job of that, I'll be out of a job,
Yeah.
right? So it's something from a due diligence perspective that I take very seriously because it's my clients, it's my clients' money being put to work, which is losing individuals' capital and principles. Just like it's not a comforting thought. So that's why you go through the paces that we do to really ensure that we're doing all we can to ensure that doesn't happen.
Yeah.
But I also, even though there's that responsibility, it's something I really like doing because similar to what I was saying before, it has kind of there is some financial advisor components to the job, but it's very rewarding and fulfilling.
Yeah. Love that. What are your company goals over the next 9 to 12 months, next year or so?
Yeah, so historically, always the focus has been on, and we still are focused on value add multifamily, but now the goal is to really to provide my clients the ability to build out a very robust real estate investment portfolio because each different asset class does have its own unique strengths to it. So what does that entail? I vetted out and now I'm going to be offering really right after the beginning of the year, which is exciting, an opportunity in short-term rentals. So working with a group that is institutionalized in the short-term rental space. I'm going through the process now with a couple different groups looking at debt funds. So what this is debt funds that could pay maybe somewhere between 9 to 10%, right? That has liquidity within 90 days. I want to be able to, because I want to provide folks who maybe have some money that think of like a high yield savings account, like on steroids. Currently, high yield savings account, you could find, 4.5, some around 5%. However, that's going to change.
Hmm.
Um, I know based off of where inflation numbers, where the market is, that the expectation is there are going to be no further rate hikes. They've talked about maybe cutting rates 3 times next year. I candidly don't think that's going to happen. If I was a betting man, I'm going to say it's going to be two. That's just my personal opinion. But either way, those type of accounts are going to start to go down as far as even what they're going to be providing to folks, just strictly on a cash basis. So
Yeah.
giving individuals those options and look at vetting out some individuals in the mobile home park RV space. So those are my goals for the next 9 to 12 months is to really provide not just like I said historically multifamily, but other asset classes that we've been vetting and researching to help folks build out a very robust real estate investment portfolio.
I love that. I know mobile home parks, RV parks, self-storage, car wash. It seems like some of those other asset classes are becoming a little bit more sexy. I think multifamily is still a phenomenal asset
Absolutely.
class because
Yep.
it provides shelter, right? Everyone needs a place to live. But
Yep.
I do think with interest rates being a little bit higher right now, well, a lot bit higher right now,
Yeah.
there's, and some of them still cash flow, but there's a
Yep.
lot less deals on the market. So I think a lot of people are looking at some other markets or asset classes um, and uncovering like, holy crap, this is just as good as multifamily, if not
Yeah.
better in some cases. So love that you're looking to diversify a little bit. Um, in terms of, kind of want to go back here a little bit, but
Yeah.
in terms of your fund, is that just for medical professionals or is that for anyone?
Yeah, no, it's a good question, Charlie. It's definitely it is for anyone.
Okay.
Absolutely. Just the folks that we work with a lot the most is in the medical community. And I know you
Okay.
talked about too about the what's happened since COVID. I know you talked about there was some downtime that you were able to personally experience. And you said probably medical community and professionals were the exception to that. And yeah, you're spot on. There's a lot of headwinds in the medical community right now in that space. I mean, the rate of burnout
Mm,
since COVID has completely skyrocketed. Um, Dealing with insurance companies, not only somewhat dictating how they are, maybe dictating how a doctor can provide care, but also insurance reimbursements. There's a tremendous amount of M&A, merger and acquisition activity that once that happens, contracts can be renegotiated, becoming these big, and it's for those anyone out there who's worked at very large companies, organizations, a lot of bureaucracy that takes place on
mhm.
there as well. So it's really a lot of those type of things. And again, they went in the medical space, right, to take care of their patients,
Yeah.
right? And to help individuals, to help others, right? There's which they'll be familiar with the Hippocratic Oath, right? And is,
Hmm.
one, do no harm, right? Is part of that. And for me, having three family members who are in the medical space community, and especially hearing from one just how stressful it was, not only during that time, but even since then, is really been kind of the driving force for me to help and empower those individuals to get and help them again buying back their time, expanding their wealth. So I kind of have my own, you know, financial Hippocratic oath, you could say so to speak. And it's right, theirs is do no harm. Mine is really just it's preservation and growth of capital, right? And focus very much on a risk adjusted basis.
So, man, you mentioned burnout.
Yeah.
That's a term we've unfortunately heard a lot in the medical
Mhm.
field over the last few years. How do you think that they could medical professionals could reignite their passion uh, while they're staying in the medical field?
Yep.
Because I know a lot have left in the last few years,
Mhm.
but how could they get their passion, their flame, their fire back in them, you think?
Sure. And I can use this from experience to where um, talking to some of my clients about this and just even from experience, even talking to others not in the medical space, and that is having flexibility. And what I mean, and I'll elaborate into that, right? I know there's that phrase out there, golden handcuffs, that a lot
Mhm.
of individuals and people familiar with, where they're doing something, but they feel like they cannot leave because, again, the golden handcuffs, if they can't do it financially, right? By the flexibility, I mean providing them, showing them the ability to where maybe they can work less hours because they went into it for a reason. You have to spend 11 to 12 years of school to become, let's say, just to become a doctor, right? I mean, you have to be dedicated and have a passion to get into the space for the amount of schoolwork that takes. Want to show them by providing them a path of providing more cash flow and appreciation that can give them the option, hence when I use the word flexibility, to maybe work less. They're not tied down. It's that not being necessarily controlled or would they have to do something. They have the option if they
Yeah.
want to. And for those out there, I'm sure who've experienced this in anything in life, when you are forced to do something versus having the option to do something from a mentality perspective, it is like night and day.
Yeah.
Doesn't matter what field, anything you've done in life, work, non-work, the option of doing something for being forced or you feel like you have to, it's a total game changer from a mentality standpoint.
Man, I love that. So I like that a lot. And I've interviewed some medical professionals on the podcast and just talking to some that are investors. And man, I do think that phrase or that term burnout has come up almost every single time. And
Yeah,
COVID made them reevaluate their careers and their future. And they haven't left. The ones I've spoken to, they haven't left,
yeah,
but they're looking at what's the long-term goal? Is it
yeah,
to achieve burnout sooner, or is it
yeah.
to get back to that passion that they have and the
Mhm.
reason they became a doctor, a nurse, whatever. And so they've all said real estate for them is the way to help them be more passionate about their job. Why
Yeah.
do you think that medical professionals miss these opportunities to build wealth in real estate or achieve this passive income? Like, why do they miss out on that?
I think it's similar to a lot of the theme that kind of we talked about is they don't even know.
Mm,
Not only do they don't know about it, and no one's educating them about it, right? They're going through, like we talked about, the amount of years they went through school. How much of that was spent on financial literacy? Zero, minimal to none.
yeah,
So it's that combination of you don't know what you don't know. And I think that's why not only the medical community, but like we talked about, a lot of folks in general, why they miss out on it because they don't think it even exists. And then when they do hear it exists, they almost think it's too good to be true with the type of returns that these type of investments can provide.
yeah. Man, I mean, and I'm not a doctor or a medical professional by any means, but when I first heard about syndications, I actually thought it was a scam.
Yeah.
For the passive side, because I'm like, there's no way I can double my money in 3 to 5 years. There's no
Yep.
way. That's illegal.
Yeah. A lot
Um,
of people think, and that's something that it just through education um, to speak through. Because yeah, exactly. That is a piece, 100%.
yeah,
And the medical community in general is predominantly much more, risk averse
yeah.
versus, from an aggressive standpoint. So it's educating them on the intricacies and the mechanics and how this is possible.
Man, I love that. How do you think your current or excuse me, your previous profession in Wall Street helped you in real estate?
How it helped me in real estate and what I'm doing now is really showed me, again, like I mentioned about operating in somewhat in a financial advisory role, right? In
Hmm.
capacity, like we both do, Charlie, right? Every day I was talking to advisors and I talked to advisors who were great, not so great, and quite candidly terrible. Okay. We went across the full spectrum and some cared about, I would say, clients and really took that fiduciary responsibility seriously. And some it was very much a what's in it for me
Yeah,
before taking care of their clients. By being in that role and really seeing all that for a number of years I was there and meeting them in person when I would travel, it just really highlighted and showed me how a proper way and the right way to work with clients, to treat them. And I really go by, right? You try to go by the golden rule, right? Treat others the way you want to be treated and put yourself in their shoes, right? And that's why, from an incentives aligned standpoint, to invest alongside our partners in those deals, because we have as much conviction. That's why we're showing them to our presenting them to our clients. That experience was, yeah, really showed me, in my opinion, what to do, not to do, how to act, how not to act. Really highlighted a lot of things.
Man, Rob, just from talking to you, many times previously, I'm not going out on a limb here, but that, I think a lot of times, whether you're in sales or you're a financial advisor, you're a company, whoever you are, or whoever you work for, if a person or a company is disloyal and they're in it for themselves, you might be able to fool people for a little bit, but not forever, right? And so
Mm,
I love what you're talking about here, Rob, of look, it's my duty to help you, and
mm,
look, you're going to make money regardless, right? But are you going to make more money or less money if you're shady? You'll make more
mm,
upfront probably, but not in the long run, right?
mm,
And so then why would you not be transparent? Why would you not be honest and help your clients, your investors? Because the more you help them, the more you're transparent with them. Maybe a deal's not going great, right? But as long as you're transparent, you're going to have repeat investors, and then they're going to tell their friends about it as well. So
mm.
anyway, I love what you were talking about there, Rob. Um, Man, I feel like we could talk forever.
Yeah, yeah, we
But
could. Yeah,
I, there's a few minutes left.
yeah,
Want to ask you about a recent book that you've read or listened to that really stands out.
yeah. It's a book. It's not the current book I'm reading, but I probably finished, yeah, 2 months ago, and I actually reread the book. Okay, and that's the book. It's by Ed Milet. It's the Power of One More.
Yeah.
Now, for those who don't know Ed Milet, he's best-selling author, performance coach, motivational speaker, successful businessman. He really just seems to be really a generally good dude. He's got his own podcast, like you, Charlie. And why I like that book is it talks about, and this is kind of more of a outside of real estate, kind of a self-help slash mindset, where you're one conversation away, you're one meeting away, you're one appointment away. You're just one thing, one phone call. You're one thing away from something dramatically changing in your life.
Yeah.
And it's just a really good, I think, mindset to have. And it also, I mean, it talks about a lot of other things. It talks about, he talks about your internal thermostat, and you want to keep that up at a certain temperature. And one way to do that is being around people who are at the same or even higher temperature that brings you up to that level. Um, I really like the book. I like the way he writes, and that I would say, yeah, that's a recent book that I read. It's again, The Power of One More, reread it, I should say, by Ed Milet.
Mm. I have that book. I've owned it for a little bit. I've not read it
Yeah.
yet.
There's so many great books out there.
I
It's
know
like there's
that's
so much good, and it's like it's finding the time between that, or I guess audiobooks. But yeah, no, it's a good book.
yeah.
Very good.
I have that book on my desk right now, actually. Awesome. So Power of One More by Ed Milet. All right. What can people expect to see from you and your business in the next 5 years?
We're going down the road. I'm thinking 5 years out. 5 years out. I'm still young. I consider myself young. I'm 37. I'll be 42 at that time. We'll be into a new decade. Uh, from a business perspective, I know I definitely will still be doing this. I find this, just like I talked about, very rewarding work. This advisory type of capacity. I see myself business wise, again, offering a number of different investment options. I also see potentially down the road starting an individual fund that could maybe hold a number of different asset classes within that same fund versus a deal by deal basis. Uh, those are some things very high level. I see myself, that's on kind of really, and you asked on the business side. I also, then even from the personal side, still see myself. I live in the Boston area. I'm very close to my family. I love seeing my three little nieces. And while I do like to travel, this kind of is like my base, kind of like my anchor, where I just don't see myself moving somewhere long term. Right. So from a personal perspective, I definitely still see myself being in the Boston area and continue to help people get where they want to go from a financial standpoint.
Awesome. I love that. How can people reach you? I know I have, I'm going to put a bunch of links in the show notes, but
Yeah.
maybe the best way the best question should be, what's the best way for people to reach you?
Yeah. The best way people can reach me is through there's really three ways, but it's pretty simplistic. Northsquarecapital.com.
Okay.
My website is a contact us page. I can easily be reached. From a social media perspective, the two main avenues I use, Instagram, I use the most for sure, and then LinkedIn right after. LinkedIn, Rob Natale, my name. Instagram, Rob Natale _. Those are
Okay.
the three easiest places to find me.
Awesome. I'll put that in the show notes. And man, one thing that
Sure.
we didn't reach out or we didn't talk about, I didn't ask you about was
Yeah.
you have an ebook that I want to put that in the show notes as well. And
Yeah.
so just to preface that, for anyone that is interested in learning more about Rob, North Square Capital, syndications, the fund, what can you talk about what that ebook share or what you share in the ebook?
Yeah, absolutely. So the title of it is called Financial RX.
Oh,
And what
cool.
we talk about is it's really kind of going through. So I always like to give folks the reason why I'm doing what I'm doing in the first place, right? We
Yeah.
talked about this on the podcast, but includes not only that, but most importantly for the medical community, right? Talks about and puts it in numbers and figures, some of the challenges, both from a tangible and non-tangible measures that can be, equated out, like taxes. And we talked about some of the reasons for burnout. And then we go into some potential solutions, and solutions I really have a tremendous amount of conviction in, as do you, Charlie, is through real estate and some of the benefits that you can find with real estate, including some additional educational content on, syndications, the pros and cons, right? It gets a little bit more granular that you can read through, that folks can use as a really good resource to get a sense of, okay, is this the type of investing that I want to learn more about? Because, right, like anything in life, not everything is for everyone.
Yeah.
Right. And that's very important for folks to know. And this ebook, I think, covers that. If they want to learn more, my contact info is in there, and always love the chat. And we have that discussion, and then we go further if it's we both agree upon.
Cool. I love that. And for the audience, Rob's very quick to respond. He's very communicative, so feel free to reach out to him. I'll put those links in the show notes. It sounds like that ebook, Rob. It sounds like that ebook is what we talked about, but in probably more detail, more granular, in writing form instead of in audio. So
100%.
yeah,
We
that's
put it
awesome.
to make it not read. And the other goal when I put it together was not have it read like a book, kind of have it read more of a magazine. It's a little easier on the eyes.
Cool.
There's also some graphs and figures in there that really can kind of hit home some of the points that I want to make sure folks can really easily digest.
Cool. That's awesome. Man, Rob, had a awesome time talking to you.
Yeah, you
Again,
too.
once
Thanks, man.
again, thank you so much for being here. I really
Yeah.
appreciate it.
No, thanks, Charlie. No, likewise. It was awesome. Thanks again.
Yep. Thank you for listening to today's show, brought to you by H&K Investment Group, your home for passive investing. If you want to learn more about how you can invest with us, please check out our website at hkigllc.com. Don't forget to like this episode and subscribe to our podcast. Please leave us a review to let us know how we are doing. Feel free to connect with me directly on LinkedIn or Facebook. As always, I'm your host, Charlie Hardage. Catch you next time.